Hello everyone, welcome to the channel, and today we're going to be talking about 3 undervalued stocks that are on my watch list for June of 2020. I believe that the fallout from the shutdowns has left investors with a great opportunity to pick up a few stocks that are at a discount. I'll give my rationale behind the 3 stocks and relate each one to the overall themes of this video, which are inflation, fear, and the economic reopening. Know that this is not financial advice and you should always do your own research before making an investment decision. First up is Boeing, ticker symbol BA. It is one of the world's largest defense and aerospace manufacturing companies. Boeing has had a very difficult year, from the production halts and groundings of the 737 MAXs to the drops in revenue and layoffs due to the virus. The fear associated with all these issues has led to a massive 75% drop in the stock price from $350 in February to $88 in March. There has been an abundance of fear surrounding the company for a while now, but I believe much of the bad news is likely already baked into the stock price, and things should start to turn around soon. The 737 MAX's issues are expected to be resolved, and Boeing CEO is so confident in the all clear from the Federal Aviation Administration that production for these planes has already began, and deliveries are expected to resume in August. I believe much of the downside for this stock has erupted from the fear of the unknown. It was unclear as to how long Boeing would be without one of its largest money-making planes, and it's likely they sold the stock due to that fear. But now investors have a clear time frame to look forward to. Looking at recent price action, we can see an impulsive bounce off the lows followed by an upwards break of this downward sloping trend line, which is typically a very bullish indicator. I believe Boeing is currently at a heavy discount from earlier this year, and it is a stock that has all the makings of a deep value investment. Next up is Southwest Airlines, ticker symbol LUV, a major American airline that is the world's largest low-cost carrier. Much like other airlines during the early days of the virus, Southwest has seen a huge drop in stock valuation. Prices went from $59 in February to $22 in May, an approximate 62% decrease. Investors were uncertain as to when the economy would reopen, and they didn't know if people would fly around like they used to. But now, with the gradual reopening of economies around the world and TSA check-in numbers steadily increasing, I think it is safe to say that uncertainty will clear up soon. Certain airline companies with solid financials will recover as general fears continue to subside, and Southwest Airlines is no exception. The stock has a very attractive PE ratio of 9.6, a large amount of revenue, and a large amount of free cash flow, comparative to other airlines, and they also have a small amount of total debt in relation to overall assets. Looking at recent price action, there has been a substantial bounce off the lows in an impulsive fashion. In Elliott wave theory, an impulsive wave is typically followed by a slight correction and then another impulsive move upwards. Southwest has a massive amount of space here to fill, and I think it is fully capable of recovering with all those fears subsiding. And it's for all these reasons that I believe this is a great discounted stock at and around these price levels. Quick pause before the last stock on this list. If you enjoyed these picks, please drop a like to show your support and subscribe for more investing and economic related videos. Finally, we have 3M, ticker symbol MMM. The 3M company is an American multinational conglomerate corporation operating in the fields of industry, worker safety, U.S. healthcare, and consumer goods. They manufacture just about everything from office supplies to infection prevention products. They are an industrial manufacturing powerhouse. And for those of you that don't know, manufacturing is highly sensitive to inflation. As inflation decreases, consumers tend to spend less and manufacturers make less revenue. As inflation increases, consumers tend to spend more and manufacturers make more revenue. Recently, we have seen inflation drop month after month since January, and I believe this is reflected in 3M stock price. This stock has seen a near 38% drop in valuation from $182 in February to $115 in March. But now, with the Federal Reserve pumping huge stimulus into the market and the economy beginning to reopen, it's likely we see inflation start to tick upwards again. And that should in turn boost consumer spending, which helps manufacturers like 3M. Moving over to the chart, we can start to see the makings of an uptrend forming as prices continue to bounce off this lower trend line. We had an impulsive move off the lows, followed by a correction, and now we are likely in another impulsive move. It should also be noted this company has a solid PE ratio of 18.4, plenty of revenue and free cash flow, and enough total assets compared to its total debt. Couple all of this with the broader market outlook on inflation, and we could have a great undervalued play with 3M. And those are my top 3 undervalued picks for June of 2020. Thank you guys so much for watching. If you enjoyed this video, please consider dropping a like to show your support and subscribe for more investing in economic related videos. Alright, have a nice day everyone.